Stock to its nation. It is Thursday, September 25th. This is the Daily Rip Live. I'm Katy Perry, joined by Shay. It's a rainy day and dark morning in New York. I'm sure it's still dark where you are, Shay, but it's really just like the vibes are bad right now. I need something good to happen.
Yeah, well, don't turn your screen on because the market's bloody pre-market.
Oh, no.
So that won't be the saving grace.
What are you looking at? What are the streets saying?
So I think I don't know, there's some profit taking. First off, like we're still in September, and I also think the market, NASDAQ, QQQ has been up like 50% in the past 5 months. So it's been a very strong V-shaped recovery, very strong trend. And I think that a lot of people might have forgotten what's like to kind of have the ebbs and flows of the market. So I think some pullbacks are absolutely healthy. I don't even think we got that much of a pullback. The indices are down like what, 2 or 3% off their all-time highs. Like it's nothing, guys. But if you look under the hood, a lot of AI winners and a lot of hot themes, they've ran a couple 100% in the past 5 months, and they are feeling the burn because unfortunately, that has been the psychology for a lot of the mass retail where they don't participate until the move has been validated. And by then it's ran up a ton. So now that's why retail constantly holds a bag. They don't like to participate as much when the waters are super bloody. They like to participate when the sky is blue type of thing. So I think that right now it's a healthy pullback. I've got a big cash position for way too long. I have been slowly dipping my toes in. I bought Amazon, for example, this week. Like Amazon's a name that I've been building a position in, where they're the worst performing Mag 7 name. That's kind of crazy to me because when you think about laggards, you think about the AI tsunami that's coming for these names and they don't have a lifeboat. That's why they've been lagging. Amazon is not that situation at all. They've actually, they had corporate fumbles, like corporate leadership fumbles where they try to push Trainium way too aggressively on their own custom silicon chips. They didn't have the compute in-house to fulfill all the demand, and that's why their AWS growth has been lagging to Azure and Google Cloud. But that is just a temporary slip up. The demand is absolutely there, and I think that people are also discounting the ad engine that they're becoming. It is so dominant. It's a $50 billion run rate already, 35% EBIT margins. It's in line. It's growing 20% as well year over year. So they're outgrowing Meta, they're outgrowing YouTube ads, they're outgrowing Trade Desk, and they're just getting started. And the one difference that makes them so unique in the ad space is the consumer intent, where I think you think that advertising, you think about attention. The reason Google and Meta does so well is they're selling attention. Like that's how they make their money. Amazon's like not like that. They kind of sell right at the purchase. Like they're at the
Mhm.
point of purchase. That's very different. And that also has such a high value of data that they own on consumer intent that they can leverage in the new digital economy.
Yep.
That's something nobody else can do. So I think that again, they don't deserve to be a lagger. I don't love the valuation, but when you have a monopoly in what they do, they will never be like a rosy valuation. So like I've been adding, I kind of think this is going to be my biggest position because I don't think it's going
Mhm.
anywhere anytime soon.
Yeah.
And I feel comfortable adding that name.
Yeah, for additional context, I think what you call out on the media side of Amazon is really important. So, I most of my career has been in marketing and advertising, and these large agencies, some of them are publicly traded, the Publicis, others. Typically, how they're structured is they have teams around certain channels of marketing. They might have a broadcast team, they might have a digital team. There's now teams that are basically called retail media, and it's pretty much Amazon, Walmart, and it's exactly what Shy is talking about. Advertising at the point where somebody is literally card already installed on the site, ready to just hit buy in one click. So this has been a big, I mean, this has been going on in advertising for a few years now, but it's growing and growing in importance. So if you're at an agency, you have a whole team that's just working on these types of ads. It's really it's a big deal. And so I think it's interesting for the average consumer because we just kind of see these ads pop up and they're part of the shopping experience. And the original retail media was brands paying more for being high level at shelf space. You think
Mhm.
about digital shelf space, that's exactly what this is. So I think that's an important piece of Amazon's business, which Shai, you've talked about. They have so many components to track at once that sometimes you could kind of forget about some of the other ones. I also saw there was some conversation yesterday on just exactly what you're saying, Amazon sort of being a laggard. And someone's comment was, you got like Jensen Wong locked in, Satya Nadella locked in, and someone was like, Jeff Bezos just got married and like bounced. Which I don't think is true, but he is like less. He seems like I don't know. He's chilling a bit lately. I don't know. So I don't think that's directly correlated, but I thought it was an interesting call out because you have all these other tech leaders, in the news every day out there, and he's, I don't know where he is. He might still be in Italy.
I mean, I also think again, like leadership matters so much, not just on being an operator, but about communicating a narrative. Amazon's on par with Google's executives on
Mm.
just bland. They don't really care to be a showman. Zuck is a showman. He's on so many podcasts, so many video streams on just communicating what he's doing on AI front, and he's just like has that showmanship. Same with Elon, for example. Like, I just don't think that Amazon has that. They're in line with Google, but you saw what happened at Google. They real like eventually the business validates why it deserves a re-rating. It should have happened earlier for Google, but eventually the business spoke for itself. I think for Amazon, same thing. And I think that we're also not even talking about uh they have a self-driving unit, Zooks.
Hmm.
That is something that is going to be monetized down the line eventually. It's niche, but it doesn't want to be as disruptive robotaxi, but something. And then also like they're going to be a major beneficiary on robotics because they're not trying to build it themselves. They are just going to acquire whichever company solves it. I think it's Tesla. I think they're going to buy hundreds of thousands of Optimus robots, and it's going to be an instant margin lever expansion. So when you think of physical AI, who's going to be the biggest beneficiary on physical AI besides the ones who are actually making the robots? It's going to be whoever has the biggest logistics arm in the world because that's where physical margins have been capped, and that's what AI is going to unleash. That's Amazon. So right now you're already seeing glimpses of that because their margins on the e-commerce side of the business is actually picking back up a bit, and they're not just hitting break even, like they're actually turning somewhat of a profit. That's trend to only continue going from here on out. And now I think they're hopefully going to get the compute necessary to fulfill all that AWS demand. And you guys forget about Anthropic. That's Amazon backed. Anthropic is going to be a massive, like, Anthropic's picking up steam in the model space. Absolutely, especially with developers. Like, developers love it. I think that's only going to gain momentum, and exactly what Azure reacceleration happened from OpenAI. I do believe that Anthropic's going to have a similar tailwind for AWS, but all this stuff's not factored in. Lowest valuation in, I think, a decade for Amazon. If you look at EV to EBIT, and it's at 30 times. Again, that's not cheap, but it's been historically the cheapest valuation. And right now, like, market's pulling back. That's great, but I think Amazon at 220, like, compared to the other AI winners out there, that's digestible. So I'm
Yeah.
adding.
Let's stay on AI for a second. You mentioned Anthropic, and they have a major advertising campaign out right now focused on the consumer side. So to your point, enterprise developers love them. GPT is sort of like the Kleenex of LLMs. Most people just use that interchangeably with LLM if you're a regular person going about your life. But as you mentioned, there's a few of these platforms. One of them is this Canadian company, Cohere. They're an enterprise AI player. They just raised another $100 million. Their valuation is now $7 billion. And this is 1 month after closing a $500 million round. So a couple things that are interesting here. There was some reporting this week about I forget where it was. It was Fortune, I want to say, or Crunchbase, but it was talking about some of these hot AI startups. They're raising within like weeks. They're announcing a round, and then 4 or 5 weeks later, boom, another one. And then the VCs and investors are just scrambling to get on the phone and get meetings with these people. So Cohere is one where this isn't really a household name, but they also, as part of this fundraise, they struck a deal with AMD. So that's going to make Cohere's full suite of command AI models compatible with AMD's GPUs, which is sort of a direct play against NVIDIA. And this is the theme, I think, of, I don't know, a while, just these interconnections between these AI companies, the big tech companies. I don't know. I feel like I need a diagram of all of them with like a flow chart with arrows, because I think someone said on X, it's like the human centipede of tech, which is a
It
disgusting
is.
reference if you know what that is. But yeah, so I don't know. Is Cohere on your radar at all, or like what do you make of like this AMD eh, cozying up with an LLM? Is that par for the course with what we're seeing lately?
Well, Cohere's, I think I haven't looked into them too much, but I think they're specifically purpose built for businesses. Like, they could care less about the consumer
Mm-hmm.
angle. Like, I don't think they care about chatbots or like
Yep.
um, any of the gimmicky things that ChatGPT does. I think they essentially are like, if you want to think about ChatGPT, that they're kind of the all-purpose Swiss Army knife. They do so many different things. First mover advantage. I think Cohere is more like a um, power tools built for just like enterprise jobs.
Yep.
I think that Michael actually likes them. I want to say Michael talked about maybe Apple acquires Cohere
Mm,
eventually. Maybe that's like
interesting.
something he enjoyed. He spoke about, but right now, I mean, I think you're seeing all this in central partnerships in AI, and you feel like, all right, well, NVIDIA is just essentially fueling their own demand. I just think that people are realizing how much runway AI has, and they could care less what the financial engineering is in the immediate, because they
Hmm.
know it's a permanent shift in our lives forever. And there is a national security component to it. And there's also a solvency risk associated if you don't do well in this arms race. So it looks wonky right now, and it really does. I'm a full AI bull. Like, I get how um, surface level that these numbers are, and how it just feels like they can just announce these deals every single week if they wanted to,
Yeah.
because they can't back up the numbers right now, but they can probably do private bond sales to get the dollars amount to buy these purchases, and it's just a flywheel effect. I just think that it's more validation that the AI theme is so real, and they could care less on what the PR of it is,
Yeah.
because they know they need it right now. They just need the tools,
Yeah.
and they're going to get it. And I think that, again, I don't, it's they're making a bigger deal than it is. Like, it is like not. I don't think they're actual real deals if you want to think about ROI, but it also, if you think 10 years down the line, sure, the hardware component is a little fudgery, but everything else that's going to be built on top of it is going to be very real and it's going to be very unique. So
Yeah.
it's just like the dot-com era. Like structural arteries of the internet had to be built. Right now, the structural arteries of AI has to be built right now. And who cares how we get there? It just has to be done. Eventually,
Hmm.
applications get built on top of it and things will make more sense on the deals. Right now, the deals don't really make sense because you just need the infrastructure in place for the US, the Western countries to do well and make sure China does not beat
Yeah.
us. Because if China beats us, this is all who cares about all this stuff
Yeah.
because we're going to be second fiddle and you don't want to all of a sudden be running the role to now second fiddle. Like it'll get dangerous very quickly. So
Mm.
we just need to make sure that never happens.
Well, historically, it does happen, but hopefully not anytime soon when we're watching our portfolios. But I think, Shai, what you're talking about, I think about a lot with your former role in corporate strategy. Some of these companies, it must be so fun to be in that role right now, right? Like they must be just taking crazy meetings all the time, coming up with crazy schemes. Why don't we call these guys? It feels kind of geopolitical almost in the private sector of like, okay, who's aligning with who. And you're right, there's an undertone of like this like east west thing as well, but
Well,
yeah, I feel like this has got to be so fun for someone who loves deal making in these roles.
it's actually brutal. It's quite the opposite because the reason is everything's moving so fast that I know for a fact, like these C-suite are requesting sensitivity analysis of all the different scenarios because this is uncharted territory. So
Okay.
now, if you're in corporate strategy, you're gonna have to model out what
Mhm.
used to be 4 different options to now 6 different options that had secondary effects on top of it. So really, it's like 10 different options, and the it's not tangible. It's not binary because these are all just future what the economy is going to look like. And that's going to
Yeah.
change very quickly. If one variable is like all of a sudden we have to be more aggressive on this, or like we should not include that, everything else changes. So like it's a nightmare. The reason I say it's a nightmare because you're getting paid the same amount and you're
Yeah,
probably doing
right.
40 to 50% more hours than you were
Yeah.
before. And I think that you're seeing a return to office trend because they know how important this time is right now for enterprises where you have to strap up, guys. Like this is real and this is we need to make sure we're not extinct as a cog in a machine. You're being overworked a bit right now, and
Yeah.
it's going from COVID where you had all the power, you were working remote,
Yeah.
the deal flow was not there, so it was more of like, yeah, I'll have that in the pipeline. Like how long do I have? Like
Right.
end of next month. Now it's like I need this by next week. Like you have
Yeah.
to do this before it's decision. It sucks.
Yeah, it is. The power shift is real. I mean, you see it in a lot of these
Mhm.
the job numbers and just even sentiment. People are holding on to their jobs for dear lives. Employees don't have much leverage. I mean, I'm in New York. Everyone's back in the office. I don't know anyone who works from home. I personally never liked working from home. I just like to leave my house. As crazy as that sounds, but it is you don't really have leverage. I saw the new CEO Kaz at Open Door. They're all going back to the office. There's a lot of companies. I forgot who there was a big company, and I forget. I wish I remember the name, but they gave people like 6 months to be like get back to the office or leave. Like it's and if you have like a house and stuff, that's actually not that much time. So I think
Mhm.
you're right there, but you're also right on the corporate strategy. It's fun from the outside, but probably not if you're working on models until 3 in the morning. Another rumored deal that we're tracking for you guys this morning. Intel apparently, allegedly, reportedly, knocking on Apple's door for help after securing $5 billion from Nvidia and a 10% stake from the US government. They are reportedly in very early talks with Apple about an investment to aid its comeback. No deal in sight yet. These are just reports, but Intel shares jumped 6% on the news. Apple dipped about 1%. Um, Another kind of corporate strategy inside baseball question for you, Shy. Like when you're working on something early stages like this and it leaks, how does that impact the rest of the conversation? You just kind of put your head down and keep going, or can these things sort of throw those conversations for a loop?
I don't think it leaked on accident. I think that
Um,
something happened where they wanted to maybe pulse check the reaction to the news, or
yep.
they wanted to force one of the parties into a corner. For this Apple one, like I don't really understand it unless it's something Foundry related. So like maybe it's just Intel really wants an external customer on their Foundry. Like
Intel just
they
seems thirsty lately.
they have to because
I
nobody
know.
uses their Foundry except for themselves. Like it's just like imagine if you made this restaurant and your family's the only one who comes and eats it. Like you're just like, come everyone come eat our food. Like it's actually better than you think. Like don't believe the Yelp reviews type of thing. But I think they're desperate for validation, and the only validation I think they can get on Foundry is actually someone sticking their neck out. Like I'll be your customer, but like why would they? It's just it's like half the quality as TSMC. I'm not exaggerating. It's like I think it's like 50 or 60%. And I think that TSMC is like 90%. Like it's a massive delta. Maybe Elon's the one that likes to take risks, especially if it helps accelerate his vision. The manufacturing capacity that Intel has that maybe TSMC doesn't have for him to hit whatever he needs it to hit. Maybe that's worth the risk for Tesla to really be the Foundry client. We'll see. I think actually Tesla will be their first clients. Is my take.
Interesting.
Yeah,
I hadn't thought about that. Does there any past relationship with Tesla, Intel, Elon, or is this just based on knowledge of sort of Elon's style with these types of things?
Well, Intel is a very different company than it was 6 months ago. Like they have a huge turnover on executives. So I think the culture has definitely changed. I also think like whoever partners up with Intel becomes a secondary favor for Trump in a way where you don't have to like advertise like I'm going to do this for you. I'm going to bend the knee for you, Trump. Like help me out eventually. By investing in Intel, it's kind of a symbolic gesture of like, you're validating your Trump investment into Intel. We're going to help you out on that way. So I think it's like a corporate strategy again. It's kind of a win-win on sentiment and also like capitalizing on a beaten down horse that nobody has a manufacturing capabilities in the US than what Intel has. So like if they just get their together, like
together, guys.
Yeah, they can actually be a massive winner. And look, they're $145 billion. Like, you know how many companies are worth more than them all of a sudden in the past year after they ran up? Like, it's nuts. I know it's a totally different industry, but like Robinhood is like $120 billion now all of a sudden.
That's
like it's
crazy.
They're almost the same. It's again, I don't know why they're Robinhood as a comparison because it's totally different. But like another one, what's ARM Holding? ARM Holding is
I was just looking at Build-A-Bear. It's only about a bill. That would have been the best soundbite, though.
See, ARM Holding's worth more than Intel. If you told me that 5 years ago, I'd be blowing my mind. It's like they do blueprints for the chips. Like it's shocking if they're going to be worth more than Intel, who actually manufactures it. But that's the way the world went. So like, I think Intel's market cap is just really undervalued, and if they can just get a little clarity on something's working, it's going to run hard.
Yeah. Let's stay on this USA portfolio theme for a second. Talk about the stake in Intel, 10%. Lithium Americas, we talked about yesterday. I think when we brought it up on the show yesterday about a report that the Trump administration wants an equity stake. That was up, I think, 75% yesterday morning. And when the day closed, I think it was maybe 90% that it was up. It doubled. And so this is a Canadian mining company. They own 60+% of Thacker Pass in Nevada, which is a name you'll hear a lot in the context of these lithium conversations. These are resources that are fairly scarce, and so if you have access to them, you're in a really good spot. Lithium is obviously a super critical mineral for the U.S. to mine, and it is one of the largest lithium sources in North America over in Thacker Pass. And so that's why you're seeing the run up on Lithium Americas. The White House is tying the stake apparently to a $2.2 billion DOE loan. And part of a broader strategy that we're seeing, we saw that U.S. also took 15% stake in MP Materials. That is another critical materials company. And so again, you're seeing these, it's like the USA portfolio. I mean, throw these in an ETF and you're probably good to go. I see a lot of conversations, Shay, whenever something like this happens or it's hinted at, some retail investors think, okay, I need to just go buy this because if the US is taking a stake, like it's going to hands will be forced. Do you have an opinion on that sort of school of thought, watching these things happen and the immediate reaction to say, okay, well, based historically, when Trump has said, yeah, I want a piece of this, or this isn't my little crew, it tends to do well. Do you have any like thoughts for investors watching these announcements and wondering like, okay, what should I do?
So we're an unprecedented, like this is a time where we've never experienced something at all where the US government becomes a hedge fund, essentially, or investment bank. I'm okay with it though. Like I think there is an actual real national security element to AI. Like I really do believe that it's the threat's the highest it's ever been on US actually losing its lead because of a theme that's going to structurally shift the whole world. Like we have to make sure we maintain our lead. In order to do that, we might have to have some skin in the game to help these companies actually deliver what we need in the US to make sure we become the AI winners. So when you just brought up lithium, that makes sense. Like lithium is essentially what supports energy storage. Like lithium is so critical for batteries. Like you need if you want to increase AI, you're going to have to increase lithium. And as AI pushes data centers to consume a ridiculously enormous amount of electricity, we have no idea how like, tokenization is going to 10x by next year. Like it's going to be ridiculous how much energy we're going to consume on the data center front. Utilities need lithium ion storage to stabilize the grid. The grid can't handle it. So essentially, we need lithium to store that power. And LAC, it's a win. I think that's an easy win. I think for MP Materials, they don't do anything with lithium, but like their main products, rare earth elements. Like you need those. Like that goes into the permanent magnets, I believe, and it's primarily for EVs, robotics, drones. You sense a theme? Robotics and drones are going to become a reality, and if China becomes a robotics leader, which if we're gonna be honest, China's way ahead of us
I
on
was gonna say,
energy.
I feel like they might already be.
They are. So
That's
like
what
we are.
Michael was on Monday, and he was like, our Congress people need to go there because they would, sorry for my they would shit a brick if they walked into some of these factories. But continue.
No, but it's true. Like China's ahead of
Yeah.
us on the energy front. So like now we're playing a catch up. And what do you do when you catch up? You have to kind of accelerate the process. How do you accelerate the process? You do these equity deals to push funds towards what we need in order to make sure we catch up to
Yeah.
China. So I think that lithium makes sense, supports energy storage. Rare earths, aka empty materials, makes sense because it supports electrification. That's like a massive super cycle. So they complement each other. Like one feeds the power side of AI, the other feeds the infrastructure and the motion side. I love it. I don't love the like maybe capitalism is changing a little,
Yeah.
but I think capitalism is adjusting towards the necessity of national security component of what AI is going to have. And I'm totally fine with that. And I think there's going to be more deals like this. Like it's weird. It's hard to digest. It
Yeah.
causes a lot of people heartburn, but you need to do it. It
Yeah.
just long term, you need to do it.
Yeah, Michael and I, if you guys you want to geek out on this topic, Michael and I talked about it, I want to say for like 20 minutes on Tuesday. Um, he's been following these tech companies for decades in the US, globally. Like I have never talked to anyone who has much insight as him. And he's also, people calling him up from DC for guidance and advice. And so I was like, is there like a self-awareness that we're just like running the China playbook? And he was like, Not really." But it's kind of what you're saying. It's an urgency where it's kind of like you might change what you're normally doing to get to the goal because it's that important. But in his view, when he has conversations, he's like, people on the Hill don't see this as us just doing what China is doing. So they might just be in denial or they don't see it. But to your point, it is interesting times. And if you're into this like energy conversation, we just put out an interview I did with the CEO of Hylion, it's HYLN, from the Gateway Conference. It's on YouTube and our X. This guy, Thomas Healy, built this like portable power generator company out of his dorm in Carnegie Mellon. He actually recently just dethroned Kylie Jenner as the youngest self-made billionaire. I like stepped in it when I interviewed him because I accidentally called him Tommy, and he was like, "It's Thomas," and I was like, but he was so nice. But I mean, it's a really, if you're into this stuff, it's really interesting because he's got these portable like generators, but they're like enterprise level. But basically, it could decentralize the grid, and like the Navy is using them on their autonomous ships to power them. So there's going to be like the energy offshoot of this, as Tom Bruni was talking about yesterday, is so interesting, and it goes in so many different directions. So check that out if you guys are into that type of thing. There is the opening bell. Shy, how are we looking? Are we still a little bloody?
The world is ending right now, as
Okay.
we know it.
God, I
No,
gotta duck for cover under my desk.
no, it's fine. I think the market, QQQ is down 0.8%. Some initial green off the bat. We have CrowdStrike, Axon, Amazon with their break even. The biggest pullbacks are small cap, not small cap, because ASTS is $20 billion now. But like ASTS down 6%, EOSE is down 6%. Like I think, guys, like it's just profit taking. Like it's fine. If you look at some of these charts, it's been kind of bonkers. Like
Yeah.
ASTS, for example, like they're just like there's up so, like, look at that. It's just like $2.50.
Yeah.
I think that what I'm watching as right now specifically is Cypher, CIFR. You guys know.
That's trending on StockTwits right now, and I was gonna bring it up. So
Oh,
tell us about those guys.
so you guys know how bullish I am on AI utility. I am so freaking bullish on AI utility. Cypher is one of those AI utility names because everyone knows Nebius is AI utility. Everyone knows Iron is AI utility. So is Cypher Mining. I think there's a real theme that's kind of in the early innings of these miners that already have cheap power, massive facilities because of everything they've been doing in the crypto space, are now pivoting towards AI. And they already have these racks of GPUs for all the AI compute demand that a lot of these hyperscalers need. Like I mentioned, the AWS issue, it's not AWS specific, it's everyone. Like the demand is bonkers right now for compute and AI. Right now, they just can't fulfill that demand as quickly as they hope. The infrastructure side takes a while to build up. Like building up data centers, guys, it takes a long time. It's not just like I demand a data center and then the next week they have one. Like it takes a very long time. So that gap, they're going to go to these AI utility players, Cypher, Iris Energy, Nebius has really good economics for computes. Like these companies, they're going to be getting these hyperscaler deals. And Cypher today got a Google deal. Google's taking a 5% stake now in Cypher. These hyperscalers, it makes so much sense for them to continue this. It's not a one-off. Like you're going to see multiple deals. And these deals are going to be more than what the company's worth itself. I think the Cypher deal, like this is a $5 billion company. I want to see what the Google Cypher deal was. I think it was more than that. It was, it was 10-year, $5 billion AI hosting deal.
And they had another partnership this morning with a company, Fluidstack, I think people are talking about. So I'm in the comments, this one guy's like, I'm bullish AF on this, but this is moronic. And then someone goes, President Trump must invest into Cypher, to our earlier conversation.
Well, I also don't love, but they did a secondary offering right in the news announcement, $800 million. So I think that's why it faded the move. It was up 20% now. What's it at today? If you want to go to the one day. Yeah. So it faded. But the theme is still hot, guys. Like it's not, I personally don't think this is gonna be the only hyperscaler. I think there's gonna be multiple. And I think that every 3 months we get reminded how much bigger the AI demand is. I don't think we're anywhere close to peaking. I think we're in year 2, year 3 of a decade-long build out, like what Lisa at AMD just said last week. What us at Futurum have been saying for past couple months is like we're increasing the market size because everyone we talk to continue to say the demand is insatiable. There's like it is something that's so crazy early with so much runway that the dollars that are going to be spent is going to be bonkers, like absolutely bonkers. So I think right now I'm looking at the Cypher chart. Let's see what the Cypher chart is because I have been talking how bullish I am on AI utility. have not been participating. That's one thing I need to get better at as an investor, where like, I speak, I go on these streams, I go
Yeah.
on like podcasts, I talk about it, and then I never actually do
There's
the
only
move.
so many hours in the day, you
Yeah.
know?
So I think Cypher, like I'm looking at their charts. Clearly they've broken out. Let's see what their 50. They're right at the 8-day EMA, actually at 1274. That's an interest. I actually might get into a Cypher trade right now just
We're
to
doing it live.
track it.
I
Yeah, I
love it.
mean,
Live trading. We don't normally do this, Shy. If you're long-term, thoughtful, thematic. Like I know when like Jake and Jeremy are on, they're like, nah, listen. Like as soon as I
well,
start talking, they're doing something.
so I just did a tracking position. So I only bought 250 shares. I just did it right
Okay.
now, actually at 1275.
Okay.
We'll see if it hits. I think this theme is very real. So like I think that until I do more research on really the differences, like right now, Iris Energy is my favorite.
Yep.
The economics just make the most sense. But there's going to be I think this whole theme is going to move in a bucket. It's not going to be like, oh, this specific company is going to do well and the others won't. Like it's not going to be like the Max 7, or it's not going to be like software names. It's going to be
Yeah.
like the demand for this whole AI utility theme. So right now, I think Google, that's a big win. So essentially, reason I'm also bullish is like I just got Cypher for 10% lower than what the world was knowing what Cypher is before the Google stake. So now, like a Google stake makes me even more bullish. I don't
Yeah.
love the $800 million dilution, but I also know how real this demand is. Like the
Yeah.
AI demand is just so early.
It is. I think that's a good point of like, do things move as a bucket or winners and losers? And it's similar to conversations around energy. It's just like wherever we can freaking get it, we'll get it. Like people don't care. Is it solar? Is it wind? Is it nuclear? Like whatever. We like need energy. It doesn't matter. Like you make energy, I'm going to buy the energy. And so when there's that much pent up demand, it's kind of like, you'd have to really mess up. I mean, there will always be winners and losers and people who execute better, but to your point, there's just like this desperation right now. So that I'm glad you brought that up because I was looking at that. I was looking at the trending list and it was up there, and I was like, I never even this one wasn't on my radar at all. So you bucket them as AI utility. What other types of companies would be considered AI utility? Would like a data center be AI utility as well, or is that infrastructure?
No, I think it's just more the when I think about utility, I think about energy. That's why I call them an AI
Okay.
utility. Because
Yep.
so I think it's more of like data
Literal.
center.
Yeah.
Yeah, so utility. So we are actually coming up with a feature on AI 15 rebalance. We are adding one layer to like removing one layer and adding a new layer, and that's utilization
Okay.
layer.
Cool.
Because I think again, like the power issue that we're about to see from this demand in AI is under discussed. Like
Yeah.
we've talked to C-suite in that space for AI. Like the tokenization is just it's 10xing next year. I don't know what's going to happen the following year. Nobody does because the demand is just so bonkers year over year. By tokenization, it's like me going to ChatGPT and doing a question. That's a token. So when you
Yeah.
think of tokenizations, it's use cases. That's a fancy word for use cases. So
Mm-hmm.
that's the big tell on AI. Everyone like you don't want to build cities with empty cities right now. So when you think about all this hardware spend, they're trying to build the city up, buildings, bridges, etc. But you need people to populate those cities to make that investment worth it. That's what inference is going to cause. Like if inference continues at the pace it's going to, again, inference is the tax on using AI, tokenization is AI usage. All this investment is rosy. You need to continue doing it. But if you build empty cities, you're gonna look like a schmuck, and this is gonna be a bubble. So I think the biggest tell isn't this hardware spend, is what the tokenization trend is going to be. What is inference going to continue being like? Right now, networking is the biggest tell on what inference is doing, and you're seeing Uncle Sam of AI, aka Broadcom. You're seeing Astera Labs. Marvell had a little slip up, but I think they're gonna be just fine. Credo Tech is interesting, but it's pretty it's more hardware than I would like, and I like Astera better. But you're seeing like networking is on fire. I think that's pre-read on inference is continuing hard. And that's the AMD thesis as well. Like inference. Like inference is if inference continues and becomes what I think it can become, that's where I think AMD is going to start eating hard because like they're not going to compete with Nvidia anytime soon. You just saw what happens as soon as Nvidia got a glimpse of what AMD is doing on the rack side. It's like, okay, we want to slow them down. We're gonna help out Intel on the CPU side. Overnight, flip a switch. They anchored their progress a little. But yeah.
Massive. I mean, yeah, just the timelines of these massive timelines. I think about like the project managers on these things, of deals made. Oh my God, the complexities of all of that. That again, if you're into it, that's really fun.
If you're into it.
If you're into that type of thing, it's not as easy as setting up a Monday.com board though to like figure out how to freaking power some of these data centers. Let's zoom out a bit and look at some of the other things we're tracking this morning before we let you guys go for the week. There was a surprise in some housing data today. New home sales in August jumping 20.5% from July. This is the highest level since 2022, and that's despite mortgage rates still hovering above 6.6. So analysts are saying this was due to better incentives and discounts that were fueling the gains. Still a little confusing because we have, as we've seen in the economic data, it's sort of all over the place. If you read one piece of data, you think one thing, you see something else, and it runs counter to that. But obviously all this is circling around high interest in stocks like Opendoor. And now Better.com, Eric Jackson has been touting those guys as well. And actually next week, we're going to have their CEO come on the show. We're picking the date. But I mentioned him on X, and he wrote back and he's like, here's my cell phone number. I'm happy to come on and talk to you guys. So send us the questions you want us to ask Vishal Garg from Better, and we'll make sure that gets into the mix. Also seeing some earnings next week, still pretty light, but Nike's going to report. That's always an interesting one. And then today, some news out of Starbucks on their turnaround. The CEO, Brian Niccol, who he was formerly of Chipotle, he's saying the company is ahead of schedule on the turnaround. I've been in some Starbucks. I don't see it myself, but that's what he's saying. So, but they're actually going to start closing underperforming stores, cutting 900 non-retail jobs. So Starbucks is a very corporate heavy company. Like if you think about Starbucks versus like a Dunkin' Donuts, very different business models. Starbucks is corporate owned stores. Dunkin' is franchise. So Dunkin's got a bunch of franchisees, not running amok, but they have a network of people kind of running things for them. Starbucks has a huge corporate arm, so they obviously have more bodies in Seattle kind of doing all of the corporate stuff, but they are cutting almost 1,000 of those non-retail jobs and freezing open positions. So he's trying to right the ship there. Shay, do you have a favorite coffee chain in LA that you go to? Is it Arnold? What is it? Is it Arnold's? What's the one?
Alfred's. No, that's too franchise for me. I've gone way too bougie with my coffee. I will admit, it's something
you
that
like the microbrew or whatever.
Well, my wife turned me and she's like, "Did you taste these beans? Like it's burnt. Like why would you like that?" And it's just like she got in my head and like you're right. I could taste it. Like Starbucks has burnt beans. But they do.
So true.
Yeah, it's just like it's not my taste. I mean, their cold brew is great. Cold brew is. Talk about utility. That's what Starbucks is. It's like the ultimate coffee utility where I just need it, get it in my system, on the go, boom. But and Dante is my favorite probably if I had to choose one. I like these specific bouge ones that have like all these different cool flavors.
I like going to Alfred's when I'm in LA because they might get a celeb sighting, might be some paparazzi. I can like walk behind like somebody and maybe get in People magazine. It's never happened, but someday it will.
No, but I like it's not the shrooms. You don't get high off it, but there's like some mushroom ones.
Oh yeah.
Like those. I like those. Those are really cool because I'm trying to not have too much caffeine. Like at one part, like earlier this year, I was having 4 shots of espresso in the morning and like an afternoon tea. Like it was getting excessive. I might switch up. I also added maybe half a Celsius in that process. Like I'm trying to get like 2 shots of espresso a day max, and sometimes infuse a non-caffeine version like the shrooms. But well, fine. Thanks, Keith. We'll stop talking about coffee and we're going to talk about the bloody markets.
Our producer's like, stop it. This thing's happening. What did we miss when we were talking about mushroom coffee? Stocks are dropping.
Yeah. Again, September things, guys. Profit taking. QQQ is up 50% in the past 5 to 6 months. RSI was at a 75. Like I said this last week, guys. RSI is at 75. Anytime above 70, it's overbought, and we're in September. And then you have to ask yourself, like, what is going to be priced in that's not being priced in for the next leg up? At the same time, like, what new variables are going to come to the newswire that's going to cause the market to pull back? I couldn't think of a new one because it's shrugging off geopolitical risk. It's shrugging off it's tariffs. It's shrugging off inflation, and we just started a rate cut cycle. So I think right now this is a healthy pullback. I truly don't think we're going to get any kind of yen-K trade crisis. We're not going to get any kind of tariff pullback. I think right now, if you want to use the average of VWAP from the tariff war bottom, which is what my favorite metric to use, because
The VWAP?
I'll do a reminder of what the VWAP is. So it's average volume weighted act. It's like the psychology of
it's what Jake always talks about.
He does? Oh, great. Because
Yeah.
like that's the best psychology of like when traders will or investors will get into a stock. It's typically you anchor it to a black swan event, because when you pull back 20 to 30%, it shakes out a lot of FOMO traders, a lot of just traders in general. So like new traders, investors come into the position when everyone else gets shaken out, when it bottoms. So now you have a new character trade on a stock when you anchor to that VWAP because everyone else got shaken out. So right now for QQQ, the VWAP, we're at 589. The VWAP's at, it's at 530. Like there is a room where we can correct 10%. And I would be happy. I have a 15% cash position. I know a lot of people who have participated a little later wouldn't be happy, but I do think that it's healthy to pull back 10% before we hit new all-time. Like I think that the longevity of the bull market will continue and be better if we actually do have some pulse checks along the way. And I don't think we're going to pull back 10% because profit taking doesn't cause a 10% correction. It has to be something much more structural. Will the government shut down next week or next couple weeks? Is that the black swan? Maybe, but I think that's just theater. I feel like every year we have that threat and it always works out. But have that list ready.
It's not functioning when they're there, so it's like, if they don't show up, maybe it would be better. I don't know. Oracle is also down almost 6%. So sorry to Larry Ellison and his glorious tan and toned arms at the age of 81. I'm sure he's crying somewhere and upset about it, but we'll keep watching it. And like you said, Shay, we've been talking for weeks about like when was their pullback going to happen. Like here it is, guys. We were talking about it. So it's not as bloody as the situation you painted that it could be based on those metrics, Shay, but something to watch. And if you have cash on the sideline, not a bad day for you. But for everyone else, stay positive. We'll get through it. Zoom out on your charts. Shay, do you have any big weekend plans?
Yeah, I have a wedding I have to go to on Saturday.
Okay.
So the husband duties have begun officially, where I have to go to these events. But it's just R&R, I guess. I have to clean out the place. My spring cleaning was a little delayed. 6 months.
Fall, Shay.
I know. So.
It's just wait until next year at this point.
I can't. I need to do it. The wedding really pushed back the spring cleaning. So
it really
I don't know. Are you doing it? You live in New York. You have a much
I'm
more
running a half marathon in the Hamptons on Saturday, which I'm excited about.
Have you trained?
Yeah, I've run 20 marathons. Like I'm like a freak runner. So this is like no big deal. I'm just excited because it's a flat course and it ends at like a vineyard. So if there's any brands out there that want to sponsor, I'll put some like masking tape and then you could just pay for my friend and I's bar tab and that would be awesome. But yeah, that's Saturday. That'll be fun. I got my Bills playing Sunday. It'll be a nice little fall weekend. But yeah, send me some positive vibes on the race. I just want to get it over with, pretty much.
Good for you.
Harry Styles ran a sub-3 marathon, if you saw that, that's freakishly fast for a non-athlete.
Well,
So, you know,
it's easier. It's easier for him because he has less hair on his head now.
it's
So I'm sure he can he can just glide a bit
it's
better.
true. The pictures were funny. He was just like, you see him, he's Harry Styles, like his thigh tats are out, and then there's just a bunch of like emaciated runners next to him. Like, what the? But yeah, well, we hope everyone at home also has a great and restful weekend. We'll be back next week on Monday, 9 a.m. Eastern. And thank you again for tuning in.